Should I monitor my net worth? Today, we will talk about the importance of regularly monitoring your net worth. So let's delve into the top 10 reasons why this practice is crucial for your financial well being. But before we get started, let's understand what is a net worth. Simply put, net worth is the difference between what you own and what you need to pay, aka assets minus liabilities. For instance, if you own a home, let's say worth $1 million, and you have a mortgage loan from your bank, let's say $700,000, your net worth is $300,000. That is $1 million minus $700,000. This is a simple example, but in reality, you will have multiple assets and liabilities that can make calculating net worth a bit complex. Calculators on the internet can give you a quick snapshot if that's what you're looking for. However, to monitor your net worth, you would need to use a spreadsheet template or a paid service like Rocket Money or Credit Karma on a regular basis. I use a spreadsheet to keep it local and private. Link to my template is in the description. So, one of the top reasons why you want to monitor your net worth is to have a financial awareness. It all starts with awareness, acknowledging the facts and your willingness to change. So be real about it. Know that regular monitoring fosters a deep understanding of your financial health, helping identify strengths and areas needing attention. Keep in mind, what you don't know, you cannot change. Monitoring net worth enables consistent tracking of progress towards financial goals, ensuring alignment with the short term and long term objectives that you may have. This is your most important number because this is what you want to achieve. Another reason for monitoring your net worth is financial growth. Monitoring net worth provides motivation and direction for enhancing net worth, driving actions that contribute to wealth accumulation. Regularly monitoring your net worth not only offers a snapshot of your current financial status, but also serves as a powerful motivator for enhancing your net worth. Consider this scenario. You set a goal to increase your net worth by a certain percentage within a year. As you track your progress, witnessing positive changes can be incredibly motivating. Let's say you implement strategies like increasing your savings rate, making smart investment decisions, and actively paying down debts. Seeing the impact of these actions on your net worth provides tangible evidence that your efforts are paying off. This motivation and direction are crucial in driving actions that contribute to wealth accumulation. It creates a positive feedback loop. The more you see your net worth grow, the more inspired you are to make financial decisions that further enhance it. This continuous cycle of monitoring, motivating, and action becomes a powerful tool for wealth building over time. Another top reason to monitor your net worth is the ability to make informed decisions. Monitoring net worth provides timely insights for informed decisions on investments, savings, and expenditures based on real time figures. For instance, imagine you are considering a new investment opportunity. By tracking your net worth regularly, you can assess your financial standing accurately. If your net worth has increased, you might have more disposable income for investments. On the other hand, if there's a dip, it could signal the need to reevaluate your investment strategy or consider adjustments to your spending habits. This real time awareness empowers you to make informed financial decisions that align with your long term goals. Another top reason to monitor your net worth is for debt management. Knowing your net worth helps in monitoring and managing debts, ensuring you are on track to reduce liabilities effectively. Consider that you're diligently managing your net worth and are confronted with a situation of accumulating credit card debt. That means your debt is increasing. Regularly monitoring your net worth allows you to promptly identify the issue and assess its impact on overall financial health. With a clear understanding of your liabilities, you can strategically develop a debt management plan. This involves prioritizing high interest debts, negotiating with creditors for lower interest rates, and setting a realistic budget to allocate funds for debt repayment. Ongoing net worth monitoring serves as a compass, enabling you to track your progress of debt reduction over time. As each payment is made, net worth increases, reflecting a positive impact on overall financial well being. Through this integrated approach, net worth monitoring becomes a dynamic tool for you in the broader strategy of debt management, empowering you to take control of your financial future and achieve lasting financial stability. Another reason why you should monitor your net worth is because it allows you to do lifestyle adjustments in spending habits or lifestyle choices to maintain or improve financial stability. Let's consider that you are actively engaged in net worth monitoring. Over time, you identify a need for lifestyle adjustments to align your spending habits with your financial goals. Net worth monitoring serves as a mirror reflecting the impact of various lifestyle choices on your overall financial health. Recognizing the importance of realigning in discretionary expenses, you strategically modify your lifestyle by cutting back on non essential spending. This might involve re-evaluating subscription services, for example, or dining out less frequently or finding cost-effective alternatives. As these adjustments are implemented, net worth becomes a tangible metric showcasing the positive impact on financial well-being. The iterative nature of net worth monitoring empowers you to fine-tune your lifestyle choices continuously, ensuring they align with your evolving financial objectives. In essence, lifestyle adjustment within the context of net worth monitoring becomes a dynamic process, allowing you to proactively shape your lifestyles in harmony with your financial goals. Another reason for you to monitor your net worth is to continuously evaluate your assets. Net worth monitoring ensures a regular review of asset values, aiding in strategic decisions related to buying, selling, or retaining investments. For example, let's consider the scenario that you own a residential property. By regularly monitoring it, you observe the property's market value grew from $350,000 to $400,000 over 6 years. This ongoing assessment becomes a pivotal factor in decision making. Let's say that in year three, you notice a significant increase and you consider selling for profit. However, strategic decision making prompts you to wait as the market stabilizes at $370,000 in year four. Ultimately, in year six, with the market value reaching 400,000, you choose to sell your property. This example shows the importance of consistent asset evaluation so you can maximize your returns. Another reason to monitor your net worth is for tax planning. Net worth monitoring facilitates proactive tax planning by understanding your financial position and potential liabilities. In the context of net worth management, let's consider that you are an investor keen on optimizing your financial landscape. In year two, as your investments yield a $10,000 profit, you strategically employ your tax planning strategy to sell underperforming assets. This helps you offset your gains and minimize your tax liability. In year three, you witness the implementation of tax loss harvesting, a deliberate strategy to sell investments with losses, effectively lowering your taxable income. Looking forward to year four, you plan for long term capital gains, holding certain investments for favorable tax treatment upon selling. Integrating your tax planning into net worth monitoring can be a pivotal factor, one that contributes not only to your financial optimization, but also that helps you align with the broader goal of enhancing your overall net worth over time. Emergency preparedness is another reason why you want to monitor your net worth. Maintaining awareness of your net worth aids in preparing for unforeseen financial emergencies and or opportunities. In the realm of net worth monitoring, knowing how much emergency fund you have or where you can get your fund from can be a strategic asset. For example, if you're faced with an unexpected car repair costing $5,000, you can swiftly tap into your emergency fund to avert the need for high interest loans. This ensures the preservation of your long term savings. The subsequent months, you see a purposeful recovery of funds as you adapt your budget to refill your emergency fund, all while tracking the progress through the ongoing net worth monitoring. This shows how integrating emergency preparedness into your net worth management is not just a contingency plan, but a dynamic strategy that empowers you to navigate unexpected financial challenges with confidence and resilience. On the flip side, you can invest your excess funds to purchase an asset that can increase your net worth in future. At the end of the day, monitoring my net worth gives me a peace of mind. Knowing that my net worth is growing gives me confidence, reduces financial stress, and promotes overall peace of mind. After all, monitoring my net worth tells me that I am on the right path or course correct as needed. Now, let's have a look at how to use a spreadsheet to monitor your net worth. After you open your spreadsheet, you'll see that there are two tabs. One is the net worth tab, and the other is the instructions tab. If you click on the instructions tab, you can follow the steps to enter data. In the net worth tab is where you will enter all your data. There's also a hidden tab if you click on unhide, and it tells you do not delete. All the formulas are in that, so don't delete that. Now, in order to enter data, first start with your start date. For example, 1/1/2024. Then define what's your goal for the year. For example, if you want to increase your net worth by 10%, you type in 10. Do not change anything in these colored cells because colored cells are automatically calculated. To add investments, if you have any, for example, if you have a Fidelity individual account, you can add that in here and then select the type of account. In this case, it's investment. Now you do have to fill in your data for day one. Day one data is your baseline for the spreadsheet. So for example, in this case, your day one is 1/1/2024. So if I have a investment of $10,000, I would put in $10,000 in this account. As you can see, everything starts to get calculated automatically. Now, if you have another account, for example, a retirement account, you can put in the account here and select retirement. And let's say if you have $5,000 in it, you add that in as well. Again, everything gets calculated automatically. Don't worry about these colors and the growth at this point. We'll come back to it. If you have properties, under properties, you can put in, if you have a primary house, you can just put in house and or address of the primary property, and then select primary home. And let's say if it's valued at $100,000, that's what you would put in. And you can get that from Zillow or Realtor.com. If you have cash, you select cash. And let's say if you have $200 of cash, you just put that in. If you have a bank account, like for example BOA, you would select the type of account, checking, savings, or any other type of account. I would select checking. Let's say if I have $3,000 in it, I just add that in. Similarly, if I have other assets, like for example car, I would select car, or if I have any other auto, I just keep adding those in. Now, car is typically not an investment asset. It's like gold is an investment asset. It may increase in value, but a car is a diminishing asset. That means the value of the car will diminish over a period of time. Now you can select diminishing for car, and let's say that Kelly Blue Book value for the car is $20,000. You put that in. Similarly, you list your liabilities under the liabilities section. If you have a mortgage on the $100,000 house, you select mortgage. It is a long-term loan, so you would put that mortgage and select long-term. And let's say you have $90,000 worth of mortgage on the account. Similarly, if you have credit cards, you can put in your credit card data by typing credit card. Since it's a short-term loan and I have $3,000 on it, I would put that in. Now, what I would recommend is if you have a credit card that you pay off every month, you don't list that in the liabilities. It goes into the cash flow. If you have a credit card that you carry a loan over a period of time and you want to decrease the loan amount or credit card loan, that's what you would track here. Now, for example, since we have a 10% decrease or a 10% net worth growth goal, you would automatically see that I have $300 as $2,700 as a target, which is $300 minus the $3,000, a 10% reduction in the credit card debt. Now, as you see, you will notice that your net worth today, with all this data that you put in, is about $45,000. And you have a net worth goal of 49,720. However, your growth seems to be looking very odd at this point. That's because you've not put in the month to month data. For example, on January 31st, you enter your data and your Fidelity account has gone up by $1,000. That will become 11,000. And then you have retirement, which becomes $5,100. And you have the property value that also increases by 1,000. You have $1,000 of that. Then you have a bank cash account, which has gone to $500, and your checking, which has gone to, let's say, $2,500. And then you have a asset, of course, the car, diminishing asset, and the value has gone to, let's say, $19,500. Similarly, the liability has decreased from 90,000 to, let's say, $89,000. And the short-term credit card debt has also decreased by $100. That and goes to $2,900. Now, as you can see, automatically you see the debt of being decreased by $100 for your target. You have reduced it by 3%, and as well as you've reduced your mortgage by 1%. After you've entered your data, just scroll up to get your snapshot. Now, as you see, your net worth has increased to $50,700. That's your current net worth in January. But your goal was 10% from the day one. Now, If you want to increase your goal, since you've already achieved it, all you do is change this to, for example, 25%, and you will see that you still have to achieve about $5,800 for the year. To get a better snapshot or a better view of your snapshot, you can go ahead and filter by removing blanks from all the sections. This will give you a better view of your graphs. As you can see, you only have two items now, Fidelity and a 401k in your asset distribution, and the mortgage and a credit card in your liabilities distribution. And that's about it.